Hello, everyone. Look, I think it's a strategic bet that Musk made that ultimately could pay dividends for Tesla in a huge way for the coming years. I think $40 to $50 per share, it adds just for beginners, not just because of what could happen from a tax credit perspective. I think leveling you track all autonomous FSD and our whole view, as we talked about in the show $1 trillion of valuation just on AI alone, this is going to unlock it. That's a key, yeah. And I think that's so on the other side, especially, it's not just for Tesla, also Apple, as well for Musk. I think was like that was a potential risk, but I think Mary and the team have kind of pulled back a little, so it's not like they bet it all on EVs. So I think one is going to be that where they get an advantage too. And I think probably most important is this autonomous FS, because when you think about cybercab and everything we've talked about, 26, could that be 25 big overhang here? I think just broader has been regulatory. I think another overhang has even been like FTC with Khan, in terms of not just for TSIP. I think broader in big tech in the view many investors I've talked to as K's likely out, in this scenario, with Trump taking over, which is bullish for him, and a bullish for big tech, less regulation. But when it comes to Tesla, it's all about Musk now having a say. He'll be what I'll call like an AI ambassador. That's essentially what the role he could play from a tech perspective. There's comfort. I think it's part of why Nvidia's up, why Semi's Apple's knocked down, despite some worries about retaliatory. Musk being there as Twilight Zone, as it sounds, actually gives some comfort that specifically on the AI piece, that he could actually make sure that this does not have unintended consequences for the big tech trade from Microsoft for the hyperscalers. And I think that's something that's clearly at play here, especially with Musk having much bigger say in the White House. Oh no. Like this is going to be you have battles that will continue to play on, for the coming years. But the big one is on the federal side, so especially what's going on in China. If Trump really tries to fast-track autonomous FSD, then everything we talked about at robot tax today, instead of 3-4 years, that's 1-2 years ahead. I think most of the investors I'm talking to, that's their big focus. Can this fast-track autonomous? The reason we're starting to see a trillion and a half mark cap as this all plays out is because I think the answer is probably yes. It adds a lot of value and makes every Tesla fan's dream come true. I think this could eventually add $40 to $50 per share at Tesla stock right away. And we're now talking about a $1 trillion half market for Tesla because first, if Trump wins, he'll actually take away the tax credits for electric vehicles. But that's still a good thing for Tesla from a scale and scope point of view. And that's a big deal. Also, I think that if Trump gets in, he will fast-track autonomous FSD Cybercab, which could get pushed back about a year. If you're a Tesla bull, this is exactly what you want to see, and Musk will clearly have a big voice in the Trump administration. From what I've seen in China, that seems like a great idea to make fast-track FSD automated. There have been a lot of governmental hurdles, and this is something that you must have talked about at Robotex today. Obviously, the initial reaction was negative, but this is going to make that chance for Musk and Tesla even bigger. Put it another way, the whole story is about making money. That's what's been holding down Tesla stock. On a general level, I'd say it was $30 to $40 per share. We didn't even expect to see a profit margin with this big of a difference. This shows that the price is lower by 200 to 300 bits. Now that there are no more cuts, the profits start to go up again. You're getting closer and closer to 20% gross earnings. I believe this is where the stock begins. It will start to make more money, and the production numbers will keep going up until next year. This stock will have 3 numbers in front of it in the end. Long term, I think this story is about robots that can drive themselves, which is a lot like the AI play on Wall Street. They needed to see that the gaps grew, but they couldn't find 13.14%. That's important for more than just the show. It means the worst is over. There will be more supplies. If you ask me, that profit margin is too high for any bear. China may have helped the economy grow during the quarter. In fact, every bull needs to have it. Don't forget that the story was about bears having a bad dream. A car that costs less than 30,000 rupees is important for growth. I believe that will happen by the middle of 2025. That's the growth. The bulls want growth rates to drop to 10 to 12%. When they talk on the call, I expect them to talk about more than just margins. I want to know more about how that car looks. This tells you where they stand. Today, we can have different opinions about robots, and a lot of people would say they were let down. What about the people who chose the vision of a self-driving May Vision Street? I think they had to walk the walk to show that they did it, and I think Musk has really done that. I mean, GM's quarter was a lot like Juan's, and from what we've seen from Tesla, I believe this is the moment of truth. That makes me excited about what the next 3 to 4 quarters will bring. Because there weren't many facts, the price of the stock dropped. As for Optimus, I don't think it has any value right now because of what we saw with cybercaps. Also, I think that the unsupervised FSD that will be added to all Tesla models in California and Texas next year will be a game changer for the store the next few years, but I don't think it will make a difference in the next quarter. I'd say first and look in terms of price per mile. I think the big focus was could they get under 50 cents. Musk talked about 20 cents per mile potential with tax is 30 to 40 cents when you look at Cybercap. And clearly the Tours Cybercap. This is something where as this goes through the next 3 to 4 years, there's no reason can ultimately be 10, 15, 20% overall profits for Tesla as is all rams up just given what our view of the overall ride-sharing market and what they could gain, and it comes down to 1.5 billion miles driven. I think we look back at last night 3, 4 years from now as a historical moment. Sure, I think it's more than prototypes, because ultimately I think the next leg of the story in terms of autonomous, I believe they will be a clear leader in broader autonomous. And I think it shows now when you look at Cybercab, that's just one piece. I think the other reason the stock's down is Model 2 lower cost vehicle. They didn't show it. I think they're not going to show we never expected. They're going to show that at the event. I still believe that's the 2025 stories. So I think broader you look at, I think demand stabilizing just a robust China quarter. I think COGS is going to come down. You got Model 2 or 2.5 in 2025. And then when I look at the future next 2, 3 years, you look at Cybercap, you look at Optimus, you look at just some of the parts, I argue the AI store, it is the most undervalued AI name in the market. No, we called out details were scarce. That was a negative. And it's a reason we wanted more details. But to me, with Musk and Tesla, in an event like that, you're maybe not going to get as many details right there as you'd want. But the reason we came out so positive in terms of the test drives, and if you look at Cybercab, and you look now at production, this is real. We're not talking prototype 2026. They start to produce this. We go into next year. This starts to become more and more of a reality. And it all comes down to us FSD penetration increases within Tesla. That the story massively changes well. I think by later this year, early next year, you basically need to have some details on when the lower cost vehicle is coming out with production.